Good morning. Good morning. That's the type of week that it's been. Good afternoon. Scott Redler, T3 Live. Welcome to today's recap. The weeks don't get any longer than we've had over the past few. We've had earnings, we've had economics reports, we've had action, we've had stocks in every different sector breaking out, extending, you name it. It's been a very conducive trading market. What we've been trying to do here is we've been trying to get everyone narrowed down to not fight a trend. You know, people on the Twitter who don't know me very well, they're like, oh, Red Dog, you're a permabull. I'm the furthest thing from a permabull. Okay, I trade trends. I try and stick with situations. I've always said that I love being long 8 to 15 positions, adding to them, taking off, looking for great patterns, shorting extensions, moving and grooving, and we don't always have that type of market. Last year was far from. You know, a year before that, it wasn't there either. We had our best year at T3 when we actually crashed because stocks go down a lot faster than they go up. So don't just make generalizations of what we do because we're doing something well, because what we do is try and be consistent. We try and find great technical patterns, have a fundamental thesis, know what's going on in the news, use a strict set of discipline / setups that we know that we have conviction with, and stay with it. And that's it. We try not to outthink ourselves. We try not to be the smartest ones out there with opinions. We just let price dictate movement. And as far as today is concerned, the table was set. The bulls have been defending the upper level floor that we talked about all week long, 1303 to 1308. And then today, whether it was the fix is in from President Obama because he wants to get elected for a second term that we can't control, or the numbers were fudged, bottom line was it was a very good report, very strong report. A lot of shorts are still rolling themselves up. And we weren't extended going into today considering we did some nice work above that level, so why not close near the highs? And I'm glad we weren't up 200-300 points. People thought, oh, we're only up 150 points in the Dow, maybe we're tired. No, that's been the mantra of this move. It's been slow, methodical, everyday things to do, not just all in one, which we had last year where you're up 300, down 300. No, piece it together. That's the way we like to do things so we could find relative strength, relative weakness, and we could add to positions and keep moving around. If you look at the chart of the S&P, you'll see we broke above that 1335 area I was talking about. Here are the spiders. We went above this, what was that, 133.40. They tried to sell us off in the first 15 minutes. They couldn't do it. We closed near the highs of the day. Now you have this level here, which we're basically at, 134.82. Then you have this peak, which is 135.16, and then you have last year's high when we killed that you-know-what. That was right here around 1370, which is about 137. So again, a lot of people are saying, I want to take off some positions, I want to sell into strength, and you're allowed. No big deal. Look at the move we've had. Remember this day? Remember that Red Dog reversal down here when we made a new low, came back above, right around here. I said there's a 75% chance the low is in. Look how long we've come. So if you want to sell into some strength, be my guest. I think you should, and I think you always sell excitement. I think you always pair gains into big moves, but just stay the course and don't fight it, because still, we just did some work over here, so we're not even like 3 days up, where that's when you start thinking we're a little bit overbought. We're overbought, but we're not at extremes at all. So as far as other trades, I don't want to start running through, all the things that we've done well in the last few weeks, because you guys will think I'm chest beating, which I should do, but I'm not. I'm going to let my trusty fella do it for me towards the end of the segment, because people have been asking for Red Dog, and I'll play him a little bit right now. Just think, the batteries are out. Someone took the batteries out of Red Dog. It's okay. We'll just throw them to the side. Anyway, he sings that song that we played on the radio today at 3:30 if you're a VTF member. So with all that said, I'm just going to run through some charts. I'm going to run through 15 of them. We're not even going to see my face again until the end of this recap. Some of the charts we've been watching. Quickly, OAHs, here you go. We talked about this reverse or inverted head and shoulders pattern. Here's your left shoulder, here's your head, here's your right shoulder, making our way up. Tier 1, Tier 2, there you go, coming into resistance. If you were a macro trader buying in here, congrats. If you added to another tier right here, you're trading it well, and there you go. As far as the XLE, acting, not great here, but still working its way higher. Yesterday we talked about Schlumberger, which is not a barn burner, but it still broke above this area. It's on its way. APA, above 100, not a barn burner, on its way. Switch gears to tech, Apple, closing at highs, should continue higher. We all know that this is when I started getting very bullish on Apple again, when it broke this downtrend. This was during that gap and go December area around 3. It was like, what was this level? I think it was a 385 if I remember correctly. Yep, there it is. And then, we went sideways. We based after earnings. Your entry was around 399, or sorry about that, 449, and now we're closing here, and it's continuing. Then you want to talk about other strong stocks. You had Qualcomm, big move into earnings, needs some time. Then you had even like stocking in the penalty box that we talked about buying, which was Google, right? We said be patient. Yes, it was my stock of the year, and everyone was beating the hell out of me that we had a great trade here when it went above this 636. And people, believe it or not, we did sell after a 30-point move. Tried it around here, wasn't really working. Got out of it in earnings, lost money on the options, but who cares? Came into the 200-day, was a strategic buy. Closed today at 596. So if you're cost averaging a position, you're a macro holder, you're doing fine. There's a lot of year left. If you're an active trader, it went above 591. There's your 596. You're doing just fine. As far as the mega cap surprise, Microsoft, talked about it many times. Look at this move. I think I was on Bloomberg right around here saying Microsoft's acting frisky. Margaret Brennan made fun of me a little bit. P.S. We're at 30.24. It's been a big move. Definitely can manage this position, but I think this thing has a life at 32.33. You want to talk about other ones like this, Cisco. You guys remember we were drawing this little line here right around 1905. There you go. You had a nice quick move, retest. Now we close at 20.06. Nice little trade besides everything that happened before that. Recently, the last 2 days, we talked about VMW. I drew this little pattern here. Nice little consolidation. I think this is when I got involved. Closed on the third up day. Pretty decent, nice size move. We also talked about CRM. I got out yesterday. I don't know why. I just, it is what it is. But meanwhile, it finally broke this downtrend with some volume, closed at 124.10. If you traded it better than me, congratulations. It's got room to at least this moving average around 128.67. Still looks really good. FFIV, talked about holding the earnings gap on its way. Nice action. APKT, Sperling was all over it today. They pre-announced numbers. It came out was even worse, and then boom, kind of did like a U.S. Steel type of scenario where it was priced in, squeezed the hell out of everybody today, broke this major downtrend. So this thing has a lot of room to the upside. I would stick with that. Talking about U.S. Steel, this was when it broke out before earnings. Remember that trade was decent, came back. Tuesday, Alex and I saw the numbers come out. I'm like, you know what? Not great. It's probably fine considering look where it came from all the way down. Meanwhile, it had a nice move. FCX also not so shabby. From breaking this little 40 area, I still think it's compact. It can go. Then we switch gears. You know what? You can show my face again. I'll go right through. You see I'm a little scruffy. It's been a long week. My son has bronchitis, so he's been up at 2 o'clock in the morning for Monday through Wednesday anyway. We talked about the Facebook phenomenon, started targeting Groupon, a little LinkedIn. Guys on the radio were talking about Zynga. Groupon, I think we had an off the charts 2 or 3 times, 2050 to break the downtrend. You look here, GRPN, there you go, pow. Look at that move. Look, this is why I love downtrends. Because when downtrends break, people short against them, they have to cover. And this had a huge short interest. Nice move up to 24.43. I sold mine yesterday, the last amount of shares, probably around here. So I'm not in it for this end of it, but great trade. Congratulations. A lot of guys did well with that. LinkedIn, not a barn burner, but making its way. Started talking about it here. Busted above this downtrend. Didn't close with the authority that I would have liked, but still looks good. Guys started buying Zynga above the IPO price. That was right here, around 11.50. Went as high as almost 30% above the IPO price. Here's a pivot. Some guys even started early if that was you. Great job. A lot of work there being done. And then even, let's switch gears. Okay, let's talk financials. Let's go back to Red Dog. Red Dog was talking, I'm talking about myself in third person, great, about the banks. It was a great January effect play, and then some. Talked about Goldman Sachs when they ignited through earnings, how it had room to 115, 116. And look at Goldman Sachs. There you go, nice methodical trade. This is when it broke this mini downtrend on earnings. Then it consolidated, went again, closing the highs after first time stalling at the 200-day. Now I guess it seems like as of life, probably up to about 125, which is right around here. This is the prior support, so that should turn into some type of resistance. Morgan Stanley got upgraded. We said 20 plus. There you go, 20 plus. JP Morgan, a little lethargic, but trying to get above this 38 area, has probably room to about 39-ish. Citigroup also making its way, took back its 200-day. Bank of America crawling higher. Great trade. This is when we drew this downtrend being broken around 560. If you stayed the course and just had a position on, you're doing well. Said this year it could be about $8, and obviously it's going to happen in the first quarter besides this year. So a lot of things are happening sooner than we thought. But the banks have been a great place besides. Remember the HGX? Kramer did a whole special on it. I talked about it with him on how this could be a leading indicator for the market. It was much bigger than just one of those dead cat bounces. This was one area where you could have bought right around this 94-ish. And then once it cleared, I think he went over this level on his show that we gave him around 105. Now it closed at 123. You look at the stocks there, they've been unbelievable. You go back now, it eclipsed that February high, and now look, all of a sudden you got to go all the way back here to this one. I would definitely have taken some profits into this. It's been a big move since that Mad Money episode. Just shows you all these different sectors that are working. So as far as setups, there's not a whole lot of them. Today I entered Pandora. I think that it could be a decent trade. You have a downtrend. You have a little bit of a channel here above 14. Perhaps we can get to this area of resistance around 15. The ags, what are they doing? They're just continuing higher. This is when it broke this downtrend. This looked a lot like the OAHs on its way. So at this point, there are different stages of a rally. You have the buy the dip or the accumulation phase, like we saw with the OAHs, the XLE, the MOO, when you were in tier 1 for the anticipation part of it. Then you had the breaking of the downtrend for your tier 2. And then you have when you start to extend and you start to go, and some of the hardest things in the market is to hold your winners and stay with them. So into a move like today, not a bad idea to get back to tier 1. Not a bad idea to be hedged. I've been hedged for about a week now, and it's costing me money, but it's giving me a peace of mind to be in my 8 to 15 longs with my 1 or 2 shorts. So meanwhile, I lose a little bit on the shorts, but who cares? It's keeping me safe and sound and sleeping at night so I could stay that course, because I'm not just doing intraday action. I'm trying to stay with things for a while. So at this point, you can't be in tier 2, tier 3 long. I would say you stay tier 1, you stay multiple positions, stay with your macro trades, have a hedge on. We're overbought, but we're really not extreme. We have room to at least 1355s. I think we could even get to 1370 at some point in the next month or so. We're not going to go there in a straight line, so you could pick and choose your battle. And then if you're rolling up these shorts and you're being stubborn, you have an opinion, you know what? I hate to say, but you deserve to get a little beat up. I threw out a stat there from a gentleman that I follow pretty closely who said that, historically, the PE of the S&P is trading below a 5-decade low. That means 50 years. For 50 years, we traded at an average of a certain PE for S&P earnings, and we're trading below that. So with technology, with where the world is and this and that, and it says if we even traded at that PE, which I think is about 1650, the S&P would be 1700. We're at what? Where did we close? 1343. So anything could happen. Price action is key. Price doesn't lie. Only people do. Only politicians do. All the time, unfortunately. But anyway, maybe they did that today with the jobs number, but who cares? The market told you what it was going to do way before then. Don't fight it. So I hate to pound a dead horse or something of that nature. All I'm saying is, the action has been there. Technically, the market has given you so many clues to be long, to be in multiple positions, to trade for cash flow. We've had a great 6 weeks to the start of the market. Don't let your highs get too high. Don't start chasing if you didn't perform. Just figure out why, because this will happen again. Don't fight the tape. The tape doesn't owe you. You can't find this big trade out there because you think that you're going to catch this mega short. Who knows, maybe you do, but that's not the way to think, because right now the VIX is at such lows right now where these pull-ins have been so shallow. So until we see a composure change, why guess? The constructive composure has been telling you everywhere it's going to go. and just, keep learning and keep figuring out what you're doing right, what you're doing wrong, build on what you're doing right, try and work on what you're doing wrong, and just, be a realist, but be an optimist. You don't get anywhere being a pessimist. This weekend's a Super Bowl. Have a great time. I hope Big Blue pulls it off. It's going to be a great game. Just enjoy your family, eat some wings, go for a run, do whatever it is you do to burn off some stress, because next week's another one, and we'll see where it goes. This has been Scott Redler, T3 Live. The recap. Have a great weekend. See you Monday at the call. Have a good night.